today, I want to talk about how the brokers are preparing for the squeeze by doing something they haven't done since June of 2021. I also want to talk about how the short sellers and the market makers are now getting even more desperate. So stay tuned and let's make some money. And now I want to dive straight in with the key information. So first, I want to talk about those short sellers. You may have seen this tweet from John Hempton. So he tweeted saying, "Dear apes, why don't you sell your AMC and buy Nvidia instead?" He said A, it's going up, B, Nvidia is too big for them to manipulate, and C, Nvidia is cash flow positive, asking for a friend, and then included the all-important disclosure, which is that he's short AMC and has no position in Nvidia. So this is a short seller disclosing that he's a short seller to you, begging you to sell your AMC and buy something else like Nvidia instead. He's suggesting as a short seller this is a good idea to do right now because right now Nvidia is going up and right now AMC is coming down. Now obviously this is exactly what a short seller would say to you because they need you to sell shares in a company like AMC that they're shorting because selling shares pushes the price down, which is obviously beneficial for short sellers who benefit when the price falls further. He also benefits because then he can have your shares which he can buy back to close out of his short position. This is obviously what the short sellers need because they know retail investors aren't selling shares and therefore they can't escape their short position unless the price goes higher and they pay the prices that we want. Now you may have seen this quote before, but when investing it's best to buy low and sell high. It's pretty simple, says Jim Rogers. Buying low and selling high makes you a profit. Now what John Hempton isn't telling you is that right now AMC is down 94% all time, suggesting that right now AMC is at that low position. And on the flip side, Nvidia is currently up 115,324%. So if you were to follow that age-old advice of buying high and selling low, AMC is currently at that low position and Nvidia is currently at that high position. Now obviously I'm not suggesting that you buy or sell any shares of any company, but it seems kind of silly to sell a stock at all-time lows and instead buy a stock at all-time highs. Typically the idea is not to buy high and sell low, it's to buy low and sell high. On top of that, we've also seen a very rude and straight up disgusting tweet from Doug Sifu recently, the CEO of Virtue, lashing out at a retail investor. Nick asks what part of the cycle this is, and Sojka has replied saying it looks like it's the nervous breakdown phase. In this tweet, Doug Sifu is being very rude, very disgusting, and also making fun of people that have special needs or disabilities, which suggests that he's clearly aggravated, he's clearly desperate, and even small things are really winding into him. As a CEO of a multi-billion-dollar company, you'd think a few words on a computer screen wouldn't aggravate him this much unless he's in a clearly annoyed, desperate, and angry state. I also wanted to go through some of the trades today from the Millionaire Mindset Trading Group. We can see for this week, Doc has locked in over $1,300 in profits. That shows that not only is Doc consistently profitable, but he's also earning over $1,000 per week in profits, which is over $5,000 per month. John also took 5 trades today, being profitable on 4 of them with 1 tiny loser, which again suggests these winning trades aren't just 1 in a million or a needle in a haystack. Actually, these winning trades happen not only every single day, but multiple times per day. On top of that, Tom's one singular light bulb also locked in 81% gains on Microsoft. So guys, be sure to join the group using the link in the description below, remembering that 100% guaranteed refund policy if you don't make a singular profitable trade within 30 days. On top of that, we're also seeing more shills coming out of the woodwork, still blaming Adam Aaron for AMC's stock price. Getting angry, the market is up another 300 points, suggesting that Adam Aaron is a con artist for not increasing his share price. This is one of those tweets that show to me that he's a shill and that he's a desperate short seller trying to infiltrate the AMC community. Obviously, Adam Aaron doesn't control the stock market and doesn't control individual companies' share prices. Adam Aaron controls the company AMC and has improved AMC massively over the last couple of years, beating analyst estimates quarter over quarter over quarter over quarter, now 11 or 12 quarters in a row. He's been consistently growing revenue, growing EBITDA, growing adjusted EBITDA, growing cash flow, growing profits, and growing everything in between. He's introduced new revenue lines, he's boosted AMC as a company, he's made it more profitable, and he's made it larger. Adam Aaron is doing a great job improving AMC as a company. You'll remember from my previous video, this is exactly what Jeff Bezos did to Amazon. Even though Amazon fell from over $100 per share down to $6 per share, Jeff Bezos focused on Amazon as a company, grew all of the figures just like Adam Aaron is doing, and now look at Amazon many years later, hitting many new all-time highs. Ignatius also tweeted about how even the mainstream media is becoming more and more desperate, suggesting that MarketBeat should really stop spreading outright lies. You may have seen this article released March 19th, 3 days ago, saying GameStop posts earnings results and it misses its estimates by 25 cents on their earnings per share, which is interesting because GameStop doesn't release its earnings until March 26th, not for another 4 days. So MarketBeat is posting something that hasn't even happened yet as a fact when the numbers haven't even been released. As Ignatius reinforced, he said GameStop's earnings results are only due on the 26th, so it's an outright lie to say that GameStop has posted its earnings results and missed estimates by 25 cents. Again, more clear FUD spreading, desperately trying to convince retail investors to sell. And I think the reason why these shorts, why these market makers, and why the mainstream media is worried and becoming even more desperate is because these brokers have just done something that they haven't done since June of 2021. They've changed the margin requirements required for buying companies like AMC and GameStop. As Boss Blunts has tweeted, he said Charles Schwab is no longer allowing unsettled cash to purchase GameStop shares. It seems they expect a major price increase or recalling of shares. He said usually only options and non-marginable securities cannot be purchased with unsettled cash. aka a marginable security can be purchased with unsettled cash, and it's because Charles Schwab has changed AMC and GameStop from marginable securities now to non-marginable securities. Saying this means Schwab is no longer lending shares of GameStop on margin to retail or no longer allowing the buying of GameStop through margin accounts. You can see from this chat, the advisor says unfortunately we're no longer able to clear it early for trading and the 4 business days is needed for the cash to fully clear. Saying I apologise for the confusion, but ACH deposits are instant for marginable securities, but for non-marginable securities and options, it takes those 4 business days. The security you're trying to trade, GameStop, requires fully cleared funds, which is the reason. Another advisor through the Schwab assistant said the margin requirements have changed on AMC and GameStop, saying they can change those requirements at any time. And as it sits now, we would need fully settled funds before we could purchase either of those shares. And when he asked to confirm that he can no longer purchase AMC or GameStop on margin in a margin account, they were disconnected. You can see before Charles Schwab adjusted margin requirements for AMC and for GameStop as well to ensure that you're holding more cash in your margin account for long positions and for short positions. aka you can no longer buy AMC or GameStop on margin. As Boss Blunt said, clearly these brokers are expecting a major price increase or recalling of shares. And it's likely because, as Practical Stocks tweeted, the short interest on AMC is still going ballistic. Over the last week or two, I've shown you this short interest figure going from 28, 27 million up to 30, 31 million up to 33 and now to 36 million shares. Over just the last 7 days, this number of shorted shares has increased by another 10% from 33 up to 36 million shares. Since the price of AMC was pushed down a few months ago, the legally disclosed short interest has now officially doubled from 18 million shares up to 36 million. And obviously if the legally disclosed shorts have doubled, it's likely those synthetic shorts have doubled as well. If we were expecting 1 or 2 billion synthetics, that number is now 2 to 4 billion, if not significantly higher. So guys, be sure to let me know what you think down in the comments below. And as always guys, be sure to ding that notification bell, because that way you'll be alerted when I upload a new video. Cheers.